As a stock trader and an options trader, I get the question a lot, is it possible to double your money on a trade? Yeah. Can you triple your money on a trade? Absolutely. Can you quadruple your money on a trade? Yeah, sure. Right stock, right option. Correct? What if you could do that with no risk? Is it possible? Well, that's what we're going to look at today. So we're going to jump in and talk about Cal-Maine Foods, symbol CALM. If you have seen any of the other videos that I've done on this stock, we have traded it a lot. This is in 2025. We did a lot of the methodology we're going to talk about in this video during this period of time. And again, if you're trading stocks and options, you're going to be familiar with some of this stuff. It's pretty basic stuff, but it's a little creative, I think. I like to do covered calls. I sell cash covered puts. I do the wheel strategy, etc. Matter of fact, I wrote a book on it a while back. It's called the Wagon Wheel Income Generator. But we're going to talk about some of this stuff. But let's jump into the stock here, Cal-Maine. So what is going on with the stock? It is just really tanked from the high here. And first of all, when you look at a stock that's tanked, you want to know, is it company specific or is it industry specific, right? And if we look over here to one of its competitors, Vital Farms, you see the exact same pattern of really nice moves in 2025, and then it's kind of come off. Late 2025, it's come off, and that's a function of egg prices, etc. Now, Cal-Maine is the largest egg producer in the country. I like the stock. It's again, it's been a good stock. It pays a pretty hefty dividend. That's part of the plan. We're going to talk about that in a second. But they just reported earnings, and this is the reason for this video. So yesterday they reported earnings and actually came in with a good quarter. They reported $2.13 versus $1.95. Right? Beat. Everything's good. Stock still went down a little bit. We're kind of forming a base here. I think I wanted to wait till after earnings just to see what was going to happen. But again, that's kind of the reason for this video. So if we look at this stock, and typically I don't like to buy into the 200-day moving average, but I think we're coming into a pretty good valuation point here. Book value is like $56 a share or something. But anyway, most of the analysts are targeting $95 kind of price targets, maybe 100, which would kind of line up with this 200-day moving average. So that's kind of what we're going to start loosely basing our trade on. So first thing we want to do is go to the trade tab, and we're going to assume, again, we're going to assume that the stock's going to go up. But what if it goes down? Now, again, this is not a good looking chart. So we want to be careful, right? So what I want to do is let's buy the stock here. Let's just do 100 shares. Quick toss tip if you're using toss. Instead of toggling the price up and down here, you can actually grab the little blue bubble and drag it over, right? And then what I want to do is take this to the Analyze tab. The Analyze tab is awesome if you haven't used it. Actually, I already set that up. If you haven't used it, I've got a lot of videos and information on it I can walk you through. It's very, very helpful. So here is just straight buying 100 shares. I just put it at 100 shares. 100 shares of stock, right? Pretty typical. 77.80. I put it on 80 just to have a round number. As again, the actual price is 81. But again, this is just an example we're going to go through. So pretty straightforward. Stock goes down, you lose money. Stock goes up, you make money. So how do we enhance that? Well, what I want to do, if you look back at our chart here, this is an upcoming dividend. Again, think covered call kind of concept at least. We got a dividend there. We've got earnings coming up here. Another dividend there. Another earnings, etc. Right? There's the last one that was just reported yesterday. So I want to try to catch some of these dividends. So if this one goes ex-dividend, now it's 129.25, so approximately 129.26, so January 26, or excuse me, 29th. It around that date should go ex-dividend, and then the next dividend is out here on April 30th. So what I want to do, if we look at the trade tab, the option chain here. You notice they don't trade weeklies, which is a little bit of a bummer, but that's what it is. Not a big deal. These are monthly options. So I want to go all the way out to May here. That is 127 days out, but the reason for doing that again is we'll catch 2 dividends, part of the plan. That's how we get a free trade, right? So we bought the stock. What if, and I'm flipping back and forth to the chart here, what if this thing keeps going down? It's possible, right? So I want to protect it. So the first thing I want to do is I'm going to buy a protective put here, right? Again, I clicked on this. We're going to buy a put. Again, toss tip. If you grab the little bubble, the little blue bubble, and you scroll that over to 670 right there, and we're going to come back over here. And what you'll notice, it defaults to 10 contracts. We don't need 10 contracts, we need 1 contract, because 1 contract covers 100 shares or represents 100 shares. 1 option contract equals 100 shares or covers 100 shares of stock. So 670 is the cost of our put if we buy a protective put, right? So now if you look over here, we've got $450 of max risk. That's the most we can lose on the stock on the trade as is. 450 bucks out at least until 15 May when this option expires. If the stock takes off and goes up here, that's great, right? But how do we increase this even more? If we come back to our trade tab, if we notice, we've got about a $13 expected move on the stock. And as you can see where I'm getting that from, that is our expected move out to 15 May, 127 days from now, right? So $13 expected move, that gets us up to about $90, $91. Most of the analysts' price targets are around 95 or more. I'm actually going to go to 95, and what I want to do is to sell a covered call. Again, toss tip, grab the little bubble, drag it over to 150, and we're going to right click analyze trade, takes it on our analyze. Remember, we don't need 10 contracts, we just need 1, and I'll show you how to size this up in a minute. But so there's our trade. Now notice we've got $300 of risk. That is because we paid $670 for the put. We brought in $1.50 credit for the call, right? So we've got a put on the downside. On the downside, we've got a call on the upside. We also have 100 shares of stock. The risk profile for this trade is, let me stretch that back out a little bit so we can see it. Okay, is that we risk $300. If we're sitting at $95 right here, if we're sitting at 95 on 15 May, it's worth 1,200 bucks. That's pretty good, right? There you go. You quadrupled your money, basically. Again, we're making some assumptions here, right? But this profile line does not change, so that's literally what it'll be. Now we might end up here or here or here or here or here or here. Here's max profit. If we keep going, that's all we're going to get. And if we keep going this way, this is all we're going to lose, which is our $300. Here's where the twist comes in. Notice now that we do have $7,000 of margin, almost $7,800 of margin. That's fine. Again, think about this in a covered call kind of sense, it does take margin to buy the stock, etc. So if you're in a margin account, right? So the twist on the play and where it gets interesting is, again, if we catch this dividend and we catch this dividend, you see that February, March, April, May, our option contract expires out here. So we will catch these dividends. Now notice, column has a variable dividend, meaning it's variable, right? It's going to change. And that's a good thing. It can be a good thing. So last year it was $1.49. They do pay special dividends. We caught this one. I think we caught all 3 of these last year. $2.36, $1.37. This upcoming one is 72 cents. Again, it will vary, but let's assume that we make, let's just say, between 2 dividends, can we make $3 on the dividend? I think that's reasonable. We might get close, might get more, might get less, but let's just, for round numbers, let's say we get $3 on the dividend on 100 shares. That's $300, right? Well, what's our risk on the trade? $300. So if we get $300, it is the equivalent of getting this for $3 cheaper or getting $3 more credit here. You know, if you're following the logic. And I'm just doing that to visualize this. So if we say this, and we say instead of getting $1.50, add $3 from the dividend. Now we have $4.50. Now you see that on 5/16/26, 0, that means we have no risk, literally 0.00 risk on the trade. And if we go up here to 95, now we've got $1,500 of profit on the trade, right? I mean, that's amazing, right? Now you literally have a free trade, and you were including the dividend. And again, this is an example. These prices will vary a little bit. Maybe it's $25 less or more, whatever, but that's the whole concept. It might be more, and you can have literally a completely risk-free trade that you cannot lose money on. In fact, you could make money if you got $4 for a dividend, whatever. Is that likely? Well, let's go over here real quick to fundamentals. This is again on Thinkorswim. Calm, and you can get all the stats down here. But what I like to look at is our free cash flow. So our free cash flow 2021, right? 21, 22, 23, 24, 25, losing $1.42. Now we make $1.11, $14.93, back down to 6, up to 21. 2025. Where do you think this is going to go? This is just stair-stepping up, right? Pretty normal, right? There's our book value per share. Again, all the stats are down here if you want to take a look at it. Dividends per share, 2021, 3 cents, 87, $5, $1.89, $8. You know, again, this is just kind of stair-stepping up. If you're a fundamentals guy or gal, right? So this is the trade setup. Again, does take a little margin. If you did this on 1,000 shares, now you could literally replicate this for literally no cost, and then you would make $15,000. So what happens if, you got a couple scenarios here. What if they get taken over by, say Google wants to get in the chicken egg business, right? And this thing goes up. Well, you're capped. That's fine because you have no loss down here, right? The other scenario is, what if it just tanks and it just doesn't work? Well, guess what? You didn't lose any money here, and you tied up a little bit of margin for a little bit. That's fine, no big deal. Again, even let's just assume you didn't get any dividend. Well, you got $300 at risk here. That's pretty cool. The other scenario is that what if you come in here and we come up to $95 a share? 95 is our where we get called out, right? What if you get to 90? Okay, well you're still gonna get full profit here. You still catch the dividend, and guess what? At the end of May, you can write this again. You write another call and you catch this dividend. And maybe that one's $2.35 next year. Maybe it's $4. Maybe it's 50 cents. I don't know. It varies, right? But it varies on their profitability and expectations, so forth. And they are changing. Things are actually getting much better there. They're going into more cage-free and organic, that type thing. Planning for longer term is a lot more profit in that sector or that area. But again, you just replicate this trade over and over and over. And what if you don't, you say $95 call here, and we get to 94, you don't get called out. You still have the stock. You do it again, and you get this dividend, and you can keep just leapfrogging this thing over and over and over and over, and keep bringing in money. I've done these for long, quarters at a time, sometimes years at a time, and kept the stock and just keep getting the dividend, and the stock gradually goes up, etc. This is a very low beta stock, so it's not a Mag 7 kind of stock, whatever. You can do the same strategy on those type stocks, but I'm just giving you a real example here. So again, you've got a couple of scenarios. Stock goes up, stock goes down, stock goes sideways. There's not you don't really have a lot of risk on the whole entire trade setup, right? Again, if you've watched the prior videos I've done on Calm, I've done a couple when we were doing something similar with this strategy. We made a lot of money over time on this. We sold naked puts, we wrote calls, doing that whole thing. And then here's a little bit different thought process that I think we're bottoming here. We got about potentially have about a 30% upside if we do get up there. It might take some time, but again, you get paid while you wait this way, or at least you're not taking a lot of risk. So with that, I hope that helps. Again, I know it makes sense if you're a covered call writer or a cash covered put seller, that type thing, or just an options trader. Again, this is the concept that I'm trying to get across more than anything else. I'll be doing additional videos on different stocks. We do these all the time. I have a live trading room. We do these all the time. I'd love for you to join me there. I'm at Simpler Trading, and my service is called Bias, where we do this. Again, I've actually been running that service for 13 years, and we never had a down year, so high five. And had a really good year in 2025. But again, let me know your thoughts, comments, if you use this, if you don't, if you like it, if you don't. If you have questions, certainly let me know. I'll try to answer in the chat down below, and also try to join me in the Simpler Trading Bias room, and I am more than happy to help you, and you can get these type trades real time and go through them with me real time. So with that, let me wind it up. Watch for another video. I'll keep putting these out. We do these trades all the time, so I'll keep cranking these videos out. I hope you guys enjoy it. Thanks. I appreciate it. Take care.